That's stupid is what that is. Anybody, I mean, think about this. You're talking about a, one out of every $4 is of tax revenue is not usable. You can't use it because you owe it. So I don't know at what number does it implode? 30%, 40%, 50%? The bottom line is it cannot be reversed. And it doesn't matter whether Kamala wins or Trump wins. It matters not who becomes the president. It matters not who has power in Congress after this election. The math is the math, and this is not reversible. And whoever told you that 25%, oh, big deal, well, I'm sorry. I have no idea who it is, so I'm not attacking someone personally, but I'm just going to say they are a complete fool.
No, it makes sense. Like
usually I don't get pissed off like this, but somebody who says, 25% of tax revenues going to interest, that's perfectly fine and normal. No, it's not.
In an eye-opening analysis, Bill Holter underscores a grim financial reality. Nearly 25% of tax revenues are consumed just to pay interest. This unsustainable burden is escalating as older, lower-rate bonds mature and are replaced with higher-rate ones. Holter warns, it doesn't matter if Kamala wins or Trump wins, the math is the math. The situation is poised to spiral as debt hits unprecedented levels, driving the US closer to economic collapse. With $200 trillion in total obligations and the Federal Reserve set to become the last and only buyer, Holter makes one thing clear. The US faces a reckoning, and this time, it's not reversible.
You've got government numbers telling you everything is fine, but with your own two eyes, you can see that there's all kinds of problems out there. You've got even companies even like Target talking about the consumer is tapped out. So, we're going to know very shortly because we got a Christmas season coming up. But it looks to me like the consumer is tapped out. I've seen more precious metal sales, nothing big, but people raising money just to live on, which, I've not seen it in 15 years. So there's definitely tightness out there. The numbers are bogus that the government's giving us. And there is an argument to be made that we've been in a recession literally since 2010, 2011, after the recovery from 2008, because we've been on life support ever since. And why is it that the financial system / real economy, why is it that they can't stand on their own? And the answer to that is there's too much debt. But like I said, there's an argument to be made that we've basically flatlined from that point forward. Well, no, it's not sustainable, and it's not sustainable because the amount of interest we're paying out comes to pretty close to 25% of tax revenues. And that's only going to increase as older bonds that are paying much lower rates mature and get rolled over into bonds that are higher rates. That number of 1.1 trillion is going to go to 1.5 this year, and probably 2 trillion next year. So no, it is not sustainable, and it's math. This is not my opinion or your opinion. It's just math. It is not sustainable. Final schmuck is going to be the Federal Reserve. They are going to be the buyer of last and only resort, and that is outright monetization. You mentioned that the deficit this year is 2 trillion. What if the government didn't borrow and spend 2 trillion into the economy? What would the numbers look like? It would look like we're in a depression. That's what, 6-7% of GDP. What would the economy have looked like for the last 15 years, or for that matter, since the 1970s? What would the economy have looked like if it did not have the additional federal spending? It was all borrowed money. What if that money was not spent into the economy? We would not have had any growth whatsoever.
Right now we're showing 3% growth, but And those are the official numbers, Bill. I understand that. And
Yeah,
like, where is
what's
that
the
growth
number?
then coming from?
What's the number
Right,
if
three
you take
percent is the official GDP number,
no,
right?
no, no. What I'm saying is, what's the number if you take two
Oh,
trillion out of it? If you take the two
yeah,
trillion
exactly.
deficit out of it, the growth is negative. We're contracting. We are not expanding. Well, government spending, forget about the jobs, just government spending overall creates inflation because they are bidding up goods and services. They're propping the system up. They've been doing that every single day since 2008. The economy, the financial system, they are not sustainable without the federal deficits. That's stupid, is what that is. Anybody, I mean, think about this. You're talking about a, one out of every $4 is of tax revenue is not usable. You can't use it because you owe it. So I don't know at what number does it implode? 30%, 40%, 50%. The bottom line is it cannot be reversed. And it doesn't matter whether Kamala wins or Trump wins. It matters not who becomes the president. It matters not who has power in Congress after this election. The math is the math, and this is not reversible. And whoever told you that 25%, oh, big deal, well, I'm sorry. I have no idea who it is, so I'm not attacking someone personally, but I'm just going to say they are a complete fool.
No,
And
it makes sense. Like,
usually I don't get pissed off like this, but somebody who says, 25% of tax revenues going to interest, that's perfectly fine and normal. No, it's not. And that's just the deficit. That doesn't count Medicare. It doesn't count Medicaid.
exactly.
It doesn't count Social Security. It doesn't count anything of the total 200 trillion of debt and loan guarantees, social programs, etc. So the whole the number of 35 trillion, that's wrong. The number is really 200 trillion is what the US government is on the hook for. No, the debt cannot be called. I mean, treasury bonds are not puttable or callable. But let me put it this way. The government is going to default because they cannot pay that money back in current terms. What they could do is they could print $35 trillion and put it in the money supply. But what will that do? That will absolutely destroy the dollar. So they're not going to default in the form of a non-payment, but they're going to default because the dollar is going to collapse in purchasing power. And people are going to get paid back with nothing. Let me just mention your average watcher or listener is going to say, oh, no, well, the dollar hasn't lost value. Look at the US dollar index. Well, that's a piece of shit, the dollar, measured by various pieces of crap all over the world, other currencies, the euro, the yen, the pound, etc. If you want to measure the dollar, look at a cup of coffee. Look at an ounce of gold. The dollar has imploded. I mean, the dollar is down better than 90% since January 1st, 2000. At that point in time, gold was about $260, $270 an ounce. Now it's $27.50. So it's gone up better. Gold costs more than 10 times more than it did in the year 2000. That is a decline of 90%. Yeah, I mean, you could call it an attack if you want. It's basically the rest of the world is walking away from the dollar because they know, I mean, they can do math just as well or better than you and I can. They do the math and they're like, the dollar is unsustainable. We import $1 trillion worth of real stuff every year and we export $1 trillion that have no backing and they're free entirely to be printed. So the world is moving away from dollars. There's no question about it. You can call it an attack if you want. I don't think that that's the way the BRICS are trying to portray it because, they don't want an actual war. They just want free and fair settlement. And you mentioned Russia being kicked out of the SWIFT system. If you look at a chart from a year ago, last October, gold was $1,700 an ounce. Now it's over 2,700. Gold started moving, and it's pretty much been like a bulldozer in first gear for an entire year. Gold has gone higher because a year ago in October is when uh, the U.S. government started talking about uh, taking 300 billion of Russian treasury reserves and basically stealing them. And what's happened is other countries looked at that and said, "Hey, wait a minute. If they can do this to Russia, they can do it to us." So you've seen less buying of U.S. treasuries, and you've seen selling of U.S. treasuries by foreign nations that understand where this is going to go. Oil, I mean, oil and trade has been settled in dollars since 1971 or 73, the petrodollar. Uh, what's going to happen is once the BRICS unit comes forth, you're going to have what, a third or better than a third of the world is going to do all their trade transactions and trade settlements in non-dollars. So I mean, that's a huge amount of demand, which it will no longer be necessary. And those countries that have stockpiled dollars in order to settle trade, they're just going to offload those dollars.
Now that you know about this critical issue, you're going to need to check out another video that dives deeper into how these shifts impact your financial future. Don't forget to like, comment, and subscribe for more insights.